At the end of last week, before the global bond blowout, I sat down with WTFinance Anthony Fatseas for my second interview, where I was covering exactly what happened this week. We also had a rip this week in Bitcoin and gold. And so let's go back to what I was covering at the end of last week and show you how it happened this week.
Hey everyone, my name is Anthony Fatseas and welcome to another episode of the WTFinance podcast. On this episode, I have the pleasure of welcoming back Simon Dixon. So Simon, thanks so much for coming back on the podcast.
Yeah, great to be back. I enjoyed the last one. What are we going to talk about today?
Well, I was just saying before, we've got a lot to speak about, so I'm sure, plenty of topics. But where I like to start all my interviews is quite broad. So what are you currently seeing in the economy and markets since we last spoke 6 months ago? Because I feel like there's been definitely a lot that's been happening.
Yeah, I think, look, everything is on central banking policy in terms of macro at the moment. So we're seeing, bond market yield breakouts at the moment. And that is really the entire parameter of everything. Now, they can be driven by oil prices, and gold is kind of like an escape valve to measure the barometer at the moment. But really what we're seeing in the economy right now is anything to prevent foreign central banks from selling US treasuries. Because the yields, when people sell their US treasuries, that blows out the yields. And so we're at distress levels in terms of recent, throughout the whole Iran war. Anytime the 10-year treasury went above 4.5%, or the 30-year treasury went above 5%, the 30-year treasury went above 5%. We saw a taco, an unwinding, a market manipulation, something to try and calm the bondholders' nerves. And now we're well above it. So we're structurally above that right now. Everyone's trying to figure out what is Kevin Warsh at the Fed going to be doing. Really, the entire economy is in his hands. He's got the short-term rates, the global economy, in fact. He's got the short-term rates and the bondholders have the long-term rates. That then sets mortgages, and they cannot be allowed to blow out. And so they have to be bailed out if they do, because if others start selling, then the Fed has to start buying. And that's kind of really the dynamics. Now, we had an announcement of a $2 trillion Anthropic IPO. AI is definitely propping up the economy at the moment in terms of growth rates. But the economy is hot in the US. We're getting very high growth rates. Inflation is structurally above the goals. So there's really, pick your narrative. Basically, the Fed and bondholders determine how long this can go. But there's only one way out: run the economy hot, stop people selling treasuries, roll over the Ponzi scheme, and pump them in the stock market. And AI is the perfect narrative, both at a national security level, at a productivity, at an innovation level. So really it's stocks all-time highs, yield unsustainable levels, and that creates stress in mortgage market and other debt markets. A release valve is gold. Central banks are acquiring at significantly, they're just steady acquiring wherever they can. And oil prices are kind of determining the shock factor. But I think if we were to break it down into a few things, there's stress in the Japan carry trade. There's stress in the petrodollar due to the conflict in the Middle East. And then there's stress in, the ability to create euro dollars globally. And Scott Bessent is going around making sure none of those relationships break.
Yeah, I found it fascinating when they actually, recently they intervened to sort of buy yen to help strengthen it. But they actually then sold euros to do that. So it's quite an interesting mechanism that they did without speaking to the ECB before then. So as you said, that's another link to, they don't want to sell dollars because then that could, depreciate a dollar. So they're actually trying to find alternative ways to save the system without, one of those things falling.
Yeah, and we've seen at the same time, nothing that gives us any indications yet, but the DXY, which is the dollar index, relative to a basket of, the bigger story is the baskets that DXY doesn't track, the other emerging markets where capital is going in, which is measured by ETF flows. Like ETF flows in general are going outwards at the same time as all ETF flows in all indexes going up. So you're getting this structural bid in the stock market that's happening through the ETF flows. Now, the DXY is like, kind of the US ally central bank currencies type of measure. It was at a decreasing rate, which was causing a lot of this capital outflow. But as soon as the Iran war was sparked, we got a strengthening of the DXY. And it went up to a peak of 101, above 102. But now it's come below the 100 level. We've got to watch that to see if it becomes a trend. War kind of strengthened it, and strengthening it makes this running the economy hot. You dump the debt on the American people, roll over the debt, you pump it all into the stock market so asset holders benefit. And then that sacrifices the dollar slowly as world reserve currency. Once this war is settled and we know what's going to happen with the Strait of Hormuz, then I expect that to move into a medium-term weakening cycle in order to accelerate capital outflows into a multipolar world.
Yeah, okay, makes a lot of sense. And then, yeah, you said they're sort of pumping the sort of stock market high, and we saw that with the Nvidia announcement recently, with all basically the big banks and the asset managers trying to pump $500 billion into the sector. It does seem that they're just going to try and push this for as long as possible until we get this collapse that you were saying, or this depreciation.
Yeah, well, I mean, there's no other strategy. The strategy is sacrifice the dollar as world reserve currency, or you allow for a depression, which breaks everything, or you do this extreme roll over the debt, pump it into the stock market, and build a K-shaped economy. So what do you need if you're building a K-shaped economy? Obviously, it creates extreme polarization. It creates extreme wealth caps, and it creates dissatisfaction. So simultaneously, while you're building such, polarization, because those that are benefiting from this structure, i.e. those that have assets, then they're kind of okay for it to continue. They're just like, just get those rates down, just keep the pumper going, just roll over the debt, just pump my stocks, I'm about to retire. And then the others that are like, I'm never going to be able to buy a home, I'm deeper in debt, screw the system, I'm going to burn down an AI data center, I'm just pissed off. And so you've got that extreme polarization. And the only way to really control that, if we're going this route, and I think we are going this route, is to build a very strong kind of, I think, a control grid, a surveillance control grid, digitize everything, tokenize everything, build police and surveillance state infrastructure, an economy that's built upon such managing civil unrest. And that's what we're seeing. At the same time as figuring out what are you going to do if we end up with these massive productivity increases with the fewer and fewer companies that are going to benefit because they own the whole AI data center layer, versus those that are consuming. Well, the only solution in the end of that is you do a universal basic income. So you print a digital currency. You could do it either at the central bank level as a CBDC or at the private sector level as a stable coin. And then that serves both agendas. You have this massive K-shaped economy, massive concentration of wealth upwards to those that own the AI ecosystem. Then you put everyone else into a data play, which means your money becomes programmable, integrated with what's been beta tested around the world. And therefore you can control and profit from civil unrest through the police and surveillance state economy. So I think this is the trend we're moving towards. And other countries around the world are just saying, well, if America is like a regional power, what needs to be settled? Well, we're settling everything. The petrodollar, the Japan carry trade, the euro dollars, the FX swap lines, defense contracts, Iran's destroyed much of US infrastructure in the Middle East. Now that leads to new defense contracts, new agreements. We just saw, for example, that Saudi released some fake intelligence allegedly to Turkey and Pakistan because they've formed a new defense pact. They're negotiating with Iran, normalized via China. And apparently they put out some fake intelligence and it went to Egypt, and Egypt apparently, I can't verify this, leaked it to America. And so Egypt is no longer in the defense pact. So that tells me that Saudi, Iran, China, they are building, while negotiating with their partners, they're building for a post-dollar multipolar world where you no longer have America defending. And then obviously that leads to what happens to the safe passage and free trade agreements that built the Bretton Woods system. Well, if they're being destroyed, then you do a beta study, which is the Strait of Hormuz. Is Oman going to control it? Is Iran going to control it? Is there going to be a covert agreement, an overt agreement? What is the Western interest there? Is there going to be investment in rebuilding infrastructure that then leads to regional stability at the end of this? Is that the end of the forever war model? All of these are being tested via the Iran war. So I'm expecting no escalation to World War III, but a movement, bounded escalation, which is being reflected in the market towards an eventual deal that resets the world order. And I think you could say symbolically, the Strait of Hormuz will be to the American empire what the Suez Canal was to the British Empire.
Yeah, definitely. It definitely seems like that's the way it's moving. I do think I find it quite hard for Iran and Saudi Arabia to become allies, or maybe, as you say, it's not allies. It's more just the realization of collaboration and the need to work together. Otherwise, they're going to all be out of a lot of money. So maybe it's more moving towards that and rather going away against, because I think both of them is trying to be like the hegemon of the Middle East, but it hasn't worked for either of them. So moving away from that and just more collaborative.
Yeah, I think so. It's an interesting scenario that's happening. So I personally believe that once US exit, that requires a few things to make the Middle East work. Firstly, if US is exiting, then you've got to resolve what's Israel's role in the Middle East now, because historically it's been a divide and conquer covert operation to destabilize the Middle East for Western military interest. If that is changing, then Israel's role needs to change, which I think we have seen. That where everything was very covert before, now overtly people are understanding that Israel is being turned into a pariah state. There's no doubt about it, like as it is an exposure. At the same time, a lot of its defense companies are doing IPOs. That means that the state is shedding assets that are going to the private sector via IPOs. So the private transnational capital is acquiring Israel slowly, bit by bit. So you privatize Israel, the state assets are getting weaker, you turn it into a pariah state, and that's like a managed, contained transition. Well, what's the other side of that forever war? Well, it's Iran and its funding of allies and proxies, however you frame it. So if Iran is going to be shedding those proxies, which I believe is what is not happening, is not what's happening by narrative, but is what is happening by following the money and practicality, then you have to resolve Syria, you have to resolve Yemen, you have to resolve Lebanon, and you have to resolve Gaza. All of those are going down their own political track. And so Iran right now is utilizing all of its leverage, knowing that at the end of this, there could be sanction relief, there could be tolls on the Strait of Hormuz, but there's going to be significant rebuild contracts. Who's going to rebuild? China and the Gulf. So that requires a new relationship. So while right now we're looking at, what looks optically like wars, I see this as resolution to the power dynamics in the region. Now, remember, China is the most important player in the region. And if American bases are being renegotiated, then China is the one that's fueling both Iran's energy sales and the sovereign wealth funds of Qatar, Kuwait, Saudi Arabia, UAE. They are fueled by China energy purchases as the world's manufacturing base. And so China has significant leverage. Now, they normalized between Iran and Saudi Arabia in 2023. Now, if you're China, what would you be doing right now? Well, if you were doing a long-term plan, which by nature China always has long-term plans, then you'd probably say to America, all right, well, let's enter into a trade war. We'll stand down in Venezuela. You have the Western Hemisphere, and you become a regional power. will resolve Syria, which is the route to much of the trafficking routes of the proxies that Iran had historically funded and supported. Then Saudi and UAE need to decide what they're doing over Sudan and Yemen. These are key trade routes. Again, it's not just Strait of Hormuz. It's Bab al-Mandab, the Red Sea, the Suez Canal in Egypt, the complete circle, and also into the Singapore, Malaysia, Indonesia trade routes that go into China. All of these are being resolved. And so what I see right now is, yes, Iran and Saudi are historically on the other side of this. Israel is being reformed, but China is the broker amongst all of them. And what does that mean? China, the manufacturing base of the world, is also a key node in America's power. So America can't produce a weapon without China. America technology is in a bit of an AI arms race. However, it relies upon semiconductor chips in South Korea, Japan, Netherlands, Taiwan. And in terms of financial power, I think the financial power is moving towards multipolarity. It's utilizing the dollar to extract as much value, get as much leverage, and then setting up multipolar financial centers, and even hedging with CBDCs and different settlement systems on blockchains that settle outside the SWIFT payment system, and then they integrate into the Chinese payment system. So if you look at all the powers in the West, they're being negotiated. China's at the linchpin of it all. And you're not going to get, what does China want? It wants a stable Middle East and stable access to resources and stable trade routes. And it's got all the leverage. So to me, there's a theatrical element. There's also an element of utilizing aggression and power in order to get your final position. But at the end of this, a major deal gets done. And America's role is defined, China's role is defined. And I personally believe the Middle East becomes West Asia. And World War III is not practical, because if there was anything around Taiwan, you can just choke the rare earth minerals. And we're already, Russia and Ukraine has already put Russia, Ukraine, Iran, Israel has already, depleted all of the munitions for America right now. And so the military companies are cashing in, financial companies are structuring new deals, technology companies are building a global control grid, everything's settling into a multipolar world. World War III is not an option. They want that narrative because it makes more money for stocks, but it's not an option.
Yes, when you say a multipolar world, I imagine, if you look at the last 20 years, majority of money has moved from the world into the US through, basically through equities, but not as much treasuries, but mainly equities. And now you see that almost being repatriated to the specific regions and being invested within those regions, or do you see it, being invested in other parts of the world? Is that sort of what you're talking about?
Yeah, so I follow currency flows, ETF flows, stock market. You can see that when you have strengthening of emerging market currencies relative to the dollar, that implies something's creating that new demand. What is creating that new demand? Well, if you look at the countries that have resources and commodities, obviously that's in this AI build out robotic world, and electric vehicles, and this kind of neo-global industrial revolution that we're going through to transition to AI and robotics. Commodities, resources, rare earths, they're becoming the thing. That's creating demand for their currencies. But also, if you look at the asset managers, BlackRock, State Street, and Vanguard, you're getting an increase in the ETFs and an outperformance in some of those foreign stock markets relative to the S&P. And at the same time, S&P is kicking the shit out of bonds and any type of inflation hedge. And so central banks are buying gold. Foreign currencies in emerging markets with resource-rich countries are strengthening. ETF flows is increasing into emerging markets. But at the same time, who's it funded by? Well, the structural bid that everyone's just passive investing all of their pension, their insurance, their endowments. And so we're just getting all of this money flowing in. That means that the stocks just have no reflection of reality anymore, because if you're included in an index, then you get the money. And so everything has now become, how do I get included in the index so that I get the passive flows, and the money printer needs to continue printing so that everyone has more wealth to invest. And that's the Ponzi, and that's the wealth concentration. And in terms of multipolarity, you can see that in the flows. Short term, it doesn't make sense, but you've got to like zoom out in terms of, imagine the British Empire to the American Empire switch. I'd say that was it was a 40-year switch, but 20 years managed transition, and then a defining event like the Suez Canal at the end. I think we're seeing those rhymes right now. So if you are dependent upon the dollar, what are you going to do? So imagine you're a bank that gets you're the financial industrial complex. You're going to utilize the dollar to asset strip as many assets as you can, and then you're going to start deploying into multipolarity and negotiating with China.
Yeah, it doesn't make a lot of sense. One thing I've been sort of writing about is this Chinese, the Chinese economic model, its growth over the last 20 years, how unsustainable it has been. Do you see a potential for, I guess, a Plaza Accord 2.0, similar to what happened with Japanese in 1984, where the rest of the world come to them and just say, yeah, this is impossible. You need to change as a way to save the dollar system?
Yeah, potentially. Like all of that's possible. We could have this slow managed transition, which I think is more likely, or we could get a more coordinated, type of event. And what would need to happen? Well, you need a weakening of the dollar, you need a repricing of currencies in gold, and you need a strengthening of the Chinese yuan. That could happen via a Plaza Accord, and certainly could be something we would see. I tend to believe that we're just at this slow bleed, like a kind of a silent depression for those that don't own assets at the expense of those that do own assets. So I think we're headed to wealth concentration. But if something significant broke in markets, which is the big question, there's a lot of things that can break. So we know that, let's look at the commodity markets. We know that China has the actual commodities, and the West has paper contracts that are not backed by those commodities. So the only thing that fixes those is a loan of those commodities by central banks. So we know that there's more paper contracts in the West and the commodities. So PBOC could lend some of its gold if it wanted leverage. We also know that China's doing the whole AI trade significantly cheaper than the American one. And the IPOs of Anthropic, OpenAI, SpaceX, these massive multi-trillion-dollar valuations are leading to probably malinvestment that has to happen right now. But every 3 years, you need to reinvest in new chips, new infrastructure. This isn't just building the train tracks. So we know China's doing all of that cheaper. It's got robotics, it's got the rare. So, can we get another DeepSeek moment that crashes the valuation after the IPOs are done? Yeah, China has that leverage. And America will say, let us get our IPOs done, then you can do it, right? And they'll say, if you're the financial center, China's also got the ability to leverage the sovereign wealth funds that are getting FX swap lines like UAE, Gulf, Iran, whatever, all of these different countries. So if they start selling down their treasuries, they can blow out the yields. Japan tends to be decoupling. What does that mean for the relationship? When Japan starts increasing their interest rates, that breaks the Japan carry trade. That's a managed unwind because the hedge funds need access to that capital. But that means that Japan's role as a node under Bank of Japan for the Federal Reserve and the Bank for International Settlements is changing. What does that do to the historical relationship between India and China, Japan and China? Big things, big questions. And so, they've also got the bond market. They could blow out yields. They could expose the commodities. They could do a currency. They could decide to start strengthening their currency or coordinate a currency war, or they could do a stock market crash. Take your pick. But it doesn't help anyone. So a deal is the best way to resolve all of this. I think that's why, to me, it's incredibly symbolic. When Trump went to Beijing, he brought the executives of the banks, the tech companies, and Boeing and some of the military companies, because that's, Trump isn't negotiating for America, he's negotiating for them. And they all have factories and dependencies in China. So, you can imagine Elon Musk saying, please make sure we get our electric vehicle rare earth components. Please don't break anything. You can imagine Tim Cook from Apple saying, but we need our factory. I know Huawei's copying a lot of our stuff and you've got Chinese stuff, but we need that low cost. We can't build it in America. Like, iPhones would be like $10,000. We can't afford that. And Boeing saying, please buy some of our planes. And Xi Jinping's kind of saying there, well, yeah, let's do it the nice way. Just leave Taiwan alone. Stop sending military equipment to them. And so Trump came back and said, yeah, we're not doing a $15 billion sale to Taiwan of military equipment. And meanwhile, we're getting this escalation in Russia, Ukraine, and Europe, which, there's no victory for Ukraine here. Via proxy, America is fighting to the last Ukrainian. Russia's going to end up with a chunk of land, and BlackRock and the IMF are collateralizing all the debt so they can gain access and steal all the resources from Ukraine. Like, this is just a stock market stimulus, a land grab from Russia, and Ukraine is just being pawned through a fake narrative that Europe is defending democracy. So the ECB is asset stripping Europe, and at the same time, the Fed started selling down some euros. So in all, this is a central banker's game, and central bankers are coordinated via the Bank for International Settlements in terms of policy. And there's only one real independent central bank, is called PBOC. So PBOC and BIS is the real negotiation, and the most important nodes there are the Bank of Japan, the Federal Reserve, and the European Central Bank.
So what is the end game for the BIS for their approach to what they're doing? Because I guess, as you said, they're trying to create this control grid to basically, is it just for them to continue to stay in power and continue to asset strip, or what's the reasoning for it, do you think?
Yeah, I mean, it's the same model that they did in Britain. They did it was created by the Dutch Empire. It was brought to England with the Bank of England. You create private companies that extract the resources. You create a central bank that socializes losses and privatizes gains. And then you create a structure through dumping the debt on the government and transferring the wealth to private enterprise, which is the stock market. That's what happened with Dutch. It ended with the Dutch disease. That's what happened with the British, and it ended with World War I, World War II, and the Great Depression. And I don't think that's happening again, but that's what's happening essentially in America right now. What is the end game? Well, the World Economic Forum tells you, you will own nothing and you will be happy. You either join our team and you end up on the right side of the wealth extraction with the banks and the financial industrial complex, or you end up on a stable coin and in an AI control grid. You will own nothing, i.e. custody our assets. We'll issue you a token, a stable coin, a CBDC, a tokenized stock, a tokenized commodity, a tokenized currency. It will become programmable, and you'll be happy because you won't need to work, and we'll give you a universal basic income. And as long as we can slowly make this transition without people noticing, then hopefully we don't get a revolution. And if we do get a revolution, then that's where our AI drone integrated test that we did on Ukraine, and our occupation as a service that they did in West Bank, and genocide as a service that they did in Gaza comes in. They've got all the tools.
Yeah, it's scary to think. And I guess when I think about, how do they get away with this, how they sort of slowly integrate this, I have a theory where they're currently looking to, how can they devalue property? Because that's been one of the major issues, I guess, where a lot of the social instability comes from, where people, majority of their, salary goes actually paying rent or paying a mortgage. So they slowly sort of, blow that up, like we're seeing in the UK with sort of prices crashing, and that's a way for them to continue it while the stock market keeps going up. Because at the end of the day, if people can live okay and they can support themselves, then they're sort of not going to worry about those really wealthy people who keep accumulating wealth.
Yeah, so if I were a portfolio manager and I had influence over lobby and I was trying to think how I would deal with this game, I'd launch CBDCs across Europe and I'd launch stable coins in America so you can privatize everything through America. You concentrate power into the central banks across the world through CBDCs. But the backbone of the banking system is real estate. So what would I do? I try and engineer a continual pump in America of real estate. And I'd still try and do foreign stock markets and foreign property and real estate. But if I could create something where it crashes, then I just get to buy it in distress. So I'd want to create an unfair game where I could do that. So what you're noticing across Europe is unfair games being set out. Wealth tax, exit tax, and institutional exemption via BlackRock vehicles. And so if you buy via one of these vehicles, then you get exemptions from the individual tax and the wealth tax and the exit taxes. So those vehicles are able to purchase as much of the real estate as possible in this unfair game. And so you implement lots of regulations and lots of tax policy through lobby, think tanks, and NGOs. And then you purchase politicians and you put them in financial distress. The government's in distress, get them to above 100% debt to GDP. And then you get them to do something where you invest in countries which are tax havens. The populations, through some kind of immigration or tax policy, the millionaires and billionaires go to the countries that you're investing in, where you're pushing all the ETF flows. And then you leave the people, and then you introduce a wealth and exit tax. And then that destroys the value of those assets and allows you to acquire all those assets on the cheap. And this tax increase, it reduces the amount of tax that the government collects because billionaires and millionaires just leave. You end up with a dissatisfied population that you can then inflict a police and surveillance state control grid on. And then you slowly extract the value of their assets because you're exempt from the tax, while the individuals have to pay the wealth and exit tax. So whenever you get a wealth and exit tax, it reduces tax. And what does that mean? It distresses the government. When you distress the government, you load it up with more debt. When you load it up with more debt, well, that's the IMF strategy. You then do austerity measures. You then do distressed acquisition of resources, and you privatize all of the assets. So it's interesting it's happening in Netherlands because Netherlands is a key node in the AI infrastructure thing. It's interesting this happening in Japan with oil prices, and South Korea with oil prices, and in Taiwan with China. So you can end up acquiring those assets in distress, subordinate a government significantly, load it up with debt, and then you get to do the wealth extraction phase. You will owe nothing and be happy. You end up with the government's debt and the tax bill, and to protect yourself, own your assets with us. We'll custody them and we'll give you a token instead.
Yeah, maybe someone comes in as a savior and saying, "Oh, the government's screwed. Let us come in and save you," and that's where they then convince you that the new system is going to be better.
Yeah, and create an uprising where people are so dissatisfied that they demand socialism and more government intervention. Capture the government, give the government more power, socialize the losses, privatize the gains. Dump it on the government, socialize it via the markets. It's the perfect capture. And that's not new. That's what the British Empire, the Dutch Empire, and the IMF did globally. And it's what the Federal Reserve does for its BIS and IMF nodes and World Bank nodes.
Yeah, it's very scary. So how are you looking to protect yourself during this period? And what do you think are some assets or some ways to do that?
Yeah, so I think the most important thing for people to think about is understand the real war. People think this is a war between the left and the right, the immigrants, the racials, the whites, and the genocide, and the colored, and the Muslims, and the Jews, and the Christian. Like, all of that is BS. That's just. I mean, it could be true, because they can engineer it, but it's designed to put you in a box, build your social credit score, and radicalize you into a version of yourself that can't see the real battle. The real battle is between centralization and decentralization. That's the battle. So if you look at what is all of these forces, central banks, central intelligence, central digital currencies, centralized social media data, centralized identity through, digital identities. So that's the battle, right? And what is the tool that they use? Well, they do a combination of covert operations to make you think that you're supporting something else. For example, in the UK, they're saying we need to protect our children from pedophilia. So you need to get a digital ID, and you need to prove to use the internet that you're over 16. Everyone can agree with that. But the PSYOP is the solution, right? Because the solution then gives the control to the control grid. And so they take a moral cause, try and PSYOP you into thinking you're supporting that cause. And then you end up with exactly the opposite of what you voted for. So that's one strategy they use. The other is divide and conquer. The other is convenience. And so death through 1,000 cuts, right? This is what happened to cash. Digital currency is significantly more convenient than to be able to send money globally and eventually put a chip in yourself so you don't even need to pay anymore. You can walk out a shop. There's a chip inside you, and you don't need to pay. You can't steal. You can you just walk out. You take your stuff and you walk out. That's the ultimate. So convenience is the strategy. So what you've got to do is you've got to resist that. You're in the battle to try and preserve your sovereign freedom. So that means you need decentralized money, decentralized data, decentralized identity, decentralized AI, running your own LLMs. There's no point exiting. You're not going to be productive unless you're in an environment where you're in a farm and a ranch and you can exit. But for most people, you need to be productive. You need to use AI. So all of this is very overwhelming. What I don't want to do is overwhelm you. And so what are the sovereign assets? Well, it is cash, but cash gets debased. It's gold. Gold is hard to store, but, learn how to store it. Otherwise, you end up with a paper version of it. It's Bitcoin. But they're trying to capture Bitcoin and get you to custody it with them via an ETF instead. So your job is to try and resist what they want you to do, understand what they want you to do, and you create the counterforce. And the counterforce is you get to boycott, you get to lobby, you get to exit, you get to support and invest in decentralized. And so we get back to basics, right? You got to save in something. Cash will get debased. So gold is a protection, Bitcoin is a protection. Learn how to store that. Then you got to invest. Are you going to own the AI infrastructure, or are you going to opt out of that? Well, you got to become an owner, because if you're not an owner, then you're going to get crushed. I mean, that's just the rules of the game of how it's set up. So simultaneously, if you're investing in your own control grid and you own a part of it, then you got to build the exit, which is you investing in local businesses, private equity, maybe. I know this is very overwhelming, but just even free investments. All right, do I have a Bitcoin in self-custody with a node set up? Set that up. Do I have a social media platform where I control my data and I can export it? Set that up. Do I have an identity layer with zero knowledge proof? Set that up. This is all free. Am I investing in my local farmers? What happens if my supply chain goes? Have I built relationships? What is my health and psychology like? How's my mind? Am I falling for these psyops? They want you weak. What's my personal health like? Am I strong? Am I able to protect myself, defend myself? Am I eating poison? What's my local neighborhood like? What's my relationship like in my household? All of these are trying to create divide and conquer operations, divorce rates, drug addiction, homelessness. These are all engineered strategies, right? You can drive the world to that. So you've got to stand on your mind, on your body, on your spirit. I know it sounds very corny, but that's all free. That's the inner game. Then that manifests into understanding the PSYOP, how to protect yourself financially, and how to remain sovereign. And so remember, that's a journey. Don't get overwhelmed. You're not going to fix that overnight. You're going to try and fix that for the rest of your life. And you're still not going to fix it all. Every week, am I more sovereign? Am I less sovereign? Am I financially protected? Am I less financially protected? Am I more subordinate? Am I less subordinate? What are my choke points? Where can they get me? And so this is what you need to do. Now, if everyone does that, then we build a decentralized uprising, a digital resistance through decentralized technology. That's the game. That's the only way. You vote with your money, not through politics. And if you don't have money, then get that fixed. That's the first thing to fix. And by the way, they want you to believe that it's useless. They want you to believe that you need to invest in a shitcoin and get rich 1000x in 5 minutes. They want you to believe that there is no hope for the future. What you need to do is believe that I'm investing across my entire life. And in fact, we are going through a major change, but this is not the end of the world. They want you thinking it's World War III. That's submission mentally. So, that you need to do the opposite. You need a longer term time frame, because when you have a long term frame, you can slowly every month build your way out of debt. You can slowly every month allocate more money to paying your interest, away from paying interest and into buying assets. And that's a slow game. But they want you thinking that it's urgent right now. The world's going to end. That's the thing. You need to increase your time frame, because that's how you escape. If you decrease your time frame, you end up saying, what's the point? I've lost anyway. That's submission.
Yeah, it's such an important message. And I think that's why people, they YOLO into gambling, or they YOLO into sort of investments, because they're despondent about the near-term future. But if you do it over longer term, that's where potentially you can come out on top. But Simon, thanks so much. We sort of covered so much. I know we're sort of almost on time. Is that the message that you want people to take away from this? Is there anything else that people take away from the conversation?
Yeah, absolutely. The reason I've thought a lot about this, I'll do a little bit of a plug. I'm open sourcing a book that I've written called The Game of Money, from subordinate to sovereign. And so I'm taking all of these aspects, and I've had a lot of time to think about it, which is why I've been offline a lot recently. And so I'm going to try and create like an open source book where people can kind of push these things into their own LLM models, and work on a lifetime plan. So I'm trying to think what's the best I can bring to people. So if you want to follow me on that project, I'm on simondixon.com, at Simon Dixon twit on X, and Simon Dixon 21 on YouTube, where I kind of share this journey and create it together.
Yeah, perfect. I'll put that on the description below, and super interesting. So thanks again for coming on.
Thank you.